Hey guys, hope you guys had a great week trading this week. Had a lot going on with FOMOC and stuff. I heard some complaints last night about my volume and stuff cutting out and just not being good again. I just bought a new mic, so to replace this one, to be here tomorrow. I'll do some testing this weekend and see if that helps or not. But I will let you guys will let me know, I guess, but it should be here tomorrow. Anyway, so looking at the chart here, we have now had about 6.5% total move over the last 2 days now. That's pretty crazy. So biggest thing that happened today is we did not go for a back test of 390 support or even the 100 EMA here. So we now have a full candle closed over the 100 EMA. Last time that happened was right here, right before previous CPI, which as you see was the top. We didn't quite make it to the 200 EMA. There was a convincing time at the end of the day there where I thought we might, but then it looks like people took profits. So basically what I'm watching for next week is if we're going to see a push up or push down. So I talked about it earlier in my TA, but we are now at a 66 on the fear greed index. As you guys remember, January, the peak was 65, April was 62, and August was 68. So we very well could be seeing 68 or 70. If we're going to push for a higher fear greed index, and I do believe we're going to touch 200 EMA probably Monday, and then maybe even go up and touch 405.3 resistance before we retrace. However, if this is what you want to call the top, then there's a good chance we could double top right here at 398.5, and at minimum, I would expect a 390 retest. This is the key level bulls need to defend. If they can defend 390, which will be the 100 EMA by that time we get there, then that could be the reset of indicators and the take profits and the sell off that we need in order to push through. If you zoom out here, you can see this green line right here. This is the 2022 bear market resistance line. So that's not very far away. Per the trajectory we are on right now, by Friday, that gives us a resistance of 410.8. That's not very far away. That's only $12 away. I mean, that's like 3% or something like that on SPY. Not very far. So definitely going to be watching that. Looking at SPY weekly here, we have a nice blue bull channel within the overall bear channel. Same thing here, but we did dead stop hit the 100 weekly EMA and rejected hard. That'll be the key level I want to watch next week and see if we're going to break through it or if we're going to end up just sitting here and coming back down. You can see here, this is a clear area where we could see a nice double top, kind of like we saw back here, kind of like here, kind of like happened here. However, we're basically in the middle of two key levels right here. We're in between, I mean, dead center here. This actually would be like probably a decent place to do like a longer term straddle or strangle. You could, play the downside to 390 and you could play the upside to 409. I'm not really sure how well it would play out though, being because you'd have to time the DTE, and I don't really play those over long time periods. But the moral of the story is that we're at a pretty key here. If we push to the upside, we have bull channel resistance here at 404.2, which will also be the weekly 50 EMA. If we break through that, then I'm looking for that 409 channel resistance. This will be the major resistance. And then eventually we got 412.5 for the weekly bear channel resistance. So we can break the daily resistance, but we might not break the weekly resistance. If we come down here, 390 is the first big level, and then we're going to be looking at support of this rising wedge right here at 380.6, and all the way down to 375. Looking at futures, same thing. We did have that overnight. We did have a nice convincing 39.70 double top, but obviously we've pushed through that now. With our closure over the 100 EMA, same thing. This is our first full candle close over the 100 EMA though since the day before Jackson Hole. But our next resistance is right here at 40.28, big level for Sunday night Monday. If we reject there, then we're going to look at support here at 39.70 and then all the way back down to 39.05. We pushed through this. We got Monday channel resistance at 40.60 and then we have our Friday bear channel resistance for the daily at 41.28. Looking at the weekly here, we have the same nice bull channel rising right here. Same thing, dead, tracked, stopped right at the 100 EMA on the weekly. So this is a part where we could double top at 4,000. 4,000 is a pretty key level. A lot of people recognize that it's a whole number thing. If we reject here at 4,000, we very well could double top, come back down here and retest 49.13 support, even go all the way back down here to 37.70. However, if we can push through 4,000, our bull channel resistance will be 40.55. Next major level is 40.90, and then that gets us our bear channel resistance for the 2022 bear market at 41.50 for next week. We are above the JPM collar at 38.70 right now. So this is a similar thing that happened up here. We broke above the collar. It was somewhere in this range. I can't remember exactly where the calls was before it rotated, but we broke through it before we had a nice sell-off. So let's go over to Apple. Apple put this super nice double bottom in right here at 135. This would have been an amazing place to go long on some calls. Obviously, you would have been betting on the CPI beating, so that would have been a tough call. But this one is a really, really nice double bottom support right here. Now we're pushing up. We got through the 8, 20, and 50 EMA. Didn't quite touch or test the 100 EMA. So this 150.5 will be a super key level to keep an eye on. And this is a kind of the separation channel here. And then from here, once we get through 155.5, the next major level is going to be right here at 157.4. I'll zoom out here and make it a little easier here. Using this support line right here for the bear channel resistance, that resistance for Monday is only at 152.8, which is about a 2% day, 2 to 3% day for Apple. The 200 EMA is right here too. As I said before, once we get to this 200 EMA, there is usually a lot of time spent trying to get over it. As you can see here, we kind of touched it, came back down, broke over it, consolidated, dropped down. Kind of same thing here. We touched it, bounced, broke, bounced over, came back down, almost broke it, and then we finally made a move. So kind of same thing back here. We went over it, kind of bounced, came back up. The 200 EMA is always a big pivot on Apple. So this is a hard place here, especially on Apple, to go long, because we could spend a whole week here trying to just chop to get through the level. Looking at the Apple Weekly, it actually still is in a bear channel on the weekly here. It has a really nice resistance line, 3-point touch here too, 2-point on the support line. Key resistance for that next week is 152. And then first resistance for that is 150.5, which will be the 20 weekly EMA. We did close back over the weekly 8 EMA right here at 147.2, which would be the first support line, followed by 141.2, followed by 138.1. Then we have Tesla. Tesla's a tough one. I mean, it's just been so volatile. So we actually have a red, pretty widened falling wedge right here that we're trading within. And then within that red rising wedge, we have a tighter rising wedge. I meant to say falling wedge. We have a red falling wedge, and then we have a black and red falling wedge within that. We also have a nice blue recovery line right here that could be a somewhat like a V bottom. What I want to be looking for here, and I did take a short position on Tesla for next week, just because I'm looking for this 8 EMA rejection here. We tried pushing up to it and we didn't quite get through it. We also did not quite get the 196.66 gap fill, missed it by about 14 cents. So what I'm going to be looking for mostly on Monday is this 197 level right here. This is going to be a key resistance for this downward trend. If we touch this and hard reject, we're definitely going to come back down here and at least test support of this blue line. However, if we break through this line, I will close my short and I will actually probably take a call position based on trying to touch this 20 EMA. But this daily 8 EMA here, as you can see, is usually quite a fight. And I expect it to be resistant. Looking at the weekly here, we have a nice bear channel that we're still trading within here. So I know I'm in a short position, but looking at the weekly, I'm more of a macro. This actually could be considered a reversal on the weekly, kind of something that happened here. What I'm seeing is we did break through the 200 EMA, which I said before, that's the first time in 3 years that has happened. However, we did not quite get back over that key 207.3, and it did put in a pretty red week here. So this it could be considered with this hanging man candle that this is bottom and we're going to see a nice pop here. However, there's also, there's a pretty good case to say too that this was just a recoil due to CPI and it's not actually the macros of the stock with everything going on with Elon and Twitter and all the other stuff. The main thing to keep an eye on here is 195.8 is key support. That 187.6 is the key support after that for the 200 EMA. If we close below this next week, I am looking for quite a bit of downside here, as you can see. But if we can break through and we can touch 211.6 and break through that, that's bear channel that we've been in since the first week of September, almost 2 months straight now, 2.5 months almost, is broken, we could finally see some upside push. However, if you look at the way the EMA is trending here, when we come next week, that EMA is going to be right on this resistance line for my channel right here. And that's going to be a tough one to break through. So we'll have to keep a very close eye on that. So looking at the VIX here, I'm going to do a zoomed out view for us here. Something to keep in mind is that this is the first time we have closed back in this green channel since 2 days before the September CPI. 23.5, as I said, was a big level. So now that we're back below this level, I want to take a look at the last 2 times we closed below that. So the last 2 times we closed below it, the first one was the CPI, so we went up, and then we got a terrible CPI, so we rocketed. And before that was the day before Jackson Hole. So we had a big old breakup here, Jackson Hole, oh crap, rocket. Then we kind of came back down, and then CPI put us back up. So, and then back here, this was June, same thing, we came down, we hit this key level, and then this was 2 days before, or 1 day, I'm sorry, before the June CPI that pushed us back up. So now we're at the point, what is the catalyst? I said this before, and I said this even honestly on this whole sell-off that we had back in this range and stuff. I said, what is our catalyst? What is going to be the reason to make SPY sell off, but most importantly, to make the VIX go back up? We had CPI, we have FOMOC in here, we have Jackson Hole. Really for the next month until December 13th, which is the next CPI, and then the 14th is the rate hike in FOMOC, we don't really have anything. We don't have bearish catalyst. I mean, we have, we'll have like PCE and like PMI and things like that coming in, but for the most part, we don't really have like big levels or big things to put fear into the market. So I'm kind of thinking here we might actually go on like a 2-week bull run. If we can continue to unwind here, we'll be looking for this 19.7 level, and you can see the August low. This is where it was put in here. So I wonder if we are going to continue the same trend to unwind and touch this 19.7 level, which should probably put SPY back up in this range. It could put us right here at 410. It could really even put us up here in the 420s. So that's when it's going to get interesting, because we could actually break out of this bear market resistance. But does that mean the bear market's over? Does that mean everything's better and we have nothing to fear and we should, everybody should be loading their longs back up? Not really. I mean, we have another FOMOC, another CPI, and yeah, CPI has come down for the last 5 times in a row now, but there's a really good chance that we're going to get a recoil on CPI. I mean, all the analysis themselves are saying that. So this is a really, really, really tough place to trade in. I personally would not take a long right here because we're over the 75% retracement or the 25 percentile up. We're at the 200 EMA. We're at the bear market resistance within 3%. My upside risk to reward is very, very low. However, I don't see a reason to take a short position in puts a long term. I'm not talking like the next couple days. I'm talking like 30, 60 DTE puts. Because yes, we're at key resistance levels here, but we don't have a bearish catalyst. The way the market works is we have to have a reason to sell. And by we, I mean like investors, hedge funds, Joe Blows, everybody. Right now, after this CPI bounce, they're thinking this was bottom. They're like, man, that last October, that was bottom. We put the bottom in. I have no reason to sell. They're like, especially people that bought back here, they're like, wow, I got lucky. I timed this perfectly. I'm in. I'm not selling. There's no reason for me to sell. There's nothing to tell me to sell. And that's what's going to happen. And that's kind of what we saw happen back here too. We bounced and we were just pushing up, and we had a lot of low volume through here. It wasn't that there was a lot of buying happening. It's just that there was no selling happening. And then finally right here with this retrace, we finally started having some selling happen. And then it just kind of, with every big catalyst, we had more selling and more selling and more selling. And this is what we need to have happen again. We need to have a time period where there's catalyst after catalyst after catalyst after catalyst to sell off the market. However, there is not one of those right now. So there'll be natural profit taking and just kind of bounces back and down, kind of like we saw here, bounces up, up and up, up. But for the most part, I don't really see a big reason to see a big 3-4% red day, 2% red day even. So this is a really tough place where I'm going to mostly focus on my day trading and focus on playing level to level intraday. I might play like a couple, like I'm playing my Tesla put right now and things like that. But for the most part, I will not be going long on anything yet. If the VIX hits this 19.7 level here, or we get an absolute hard smack on this bear channel resistance and we retrace hard like this with this sort of doji candle up here, I will consider going long on some puts, probably like 30 DTE. Or if something crazy happens with like the crypto market, because you guys know the crypto market is looking rough. In the weekend now, this is going to be very, very interesting to watch what happens with crypto. If we can close back under 15.8 come Monday, that is going to be some margin calls starting to happen. If we start seeing 13, there's going to be panic in the markets. So until I see a catalyst, I'm not going long on on puts, I'm sorry. But I'm also not going along on calls here. And I don't recommend it for anybody either. And if you are in long calls here, I would start thinking about taking profits. If you bought calls down here and you've been riding these for weeks now, or even if you got lucky and you bought calls here and you've held them, I would very highly consider taking profits soon. You might miss another 3, 4, 5% upside, 10% maybe, but the risk to reward is getting low here. If we touch especially 405.4, I would take profits. All right, I hope you guys had a great week trading this week, and I will see you guys next week. Thanks for tuning into this video. Don't forget to go ahead and like and subscribe to stay updated. Here's the Lifetime Discord link. If you're interested, go ahead and you can type that into your browser. If that one doesn't work, just go ahead and send me a message or drop me a comment, and I will give you a new link. Here's some of the benefits. I do a pre-market analysis every day with key support and resistance level. I do a live commentary all day long on SPY. I do post my live intraday scalps and level-to-level plays. You can follow me on YouTube, Twitter, Instagram, or TikTok, and on Reddit, my name is Daddy Dersh.